Raoul Pal just said something pretty shocking to people. The 4-year cycle is now changing. Not that it's a forever cycle, but it's changing into a 5-year cycle. This is something that's really important. A lot of people are thinking if we don't top out again this quarter that we've already seen the top, right? A lot of people are looking at the previous cycles. You can see it on this chart here. These blue dots indicate the last cycle top, or the last top each cycle, and we always see it in this quarter, at least the previous 3 cycles. But Raoul Pal is saying this could change and we could push it into next year. So I want to play what he said. I want to talk about it. We'll also be going through why gold is down significantly today. It's actually down about 4%, which doesn't maybe seem like a lot, but we're talking over $1 trillion shaved off of gold's market cap, and this is an asset that usually doesn't move very quickly. We also have some news from Tom Lee from the Federal Reserve, directly correlated or directly, in regard to crypto. Also, another thing that I want to talk about, a stock that I really like that just announced something pretty big that could be very bullish for the stock, but could maybe hurt jobs. So let's talk about all that. If you don't mind, hit subscribe so you can see future videos just like this one. Also, yesterday, AWS, the outage knocked out Coinbase Mobile. Robinhood was disrupted as well. I tried to use both at different times, even like late in the day. Coinbase still was having issues. So if you haven't already signed up, I would sign up to something like BYDeFi. This is an exchange that you don't have to KYC. You don't need a VPN. You can trade and get up to a $13,000 bonus. And we have a double event going on right now. So not only can you trade just like you normally would and get bonuses that go directly into your account, you can also get a deposit bonus as well. So check that out. You can start trading using leverage, which I honestly think this is one of the greatest tools you can use during a bull run to get a lot of wealth and to be able to stack crypto even faster. They have something called Coin M, which means you can trade Bitcoin with Bitcoin. You can trade Ethereum with Ethereum. So that's great for a couple different reasons. One, you don't have to cash out to USDT, so you don't have to pay tax on selling those to then go trade. And then also, if you are sitting in, you pull some profits or something, you can keep it in the underlying asset, which can appreciate while you're waiting for the next trade. But check that out underneath the video. Let's start here. Bitcoin liquidations. Over the last 24 hours, actually, let's start right here. So all of crypto, more longs liquidated than shorts. We've actually seen the price go down a bit over the last 24 hours. Most of the liquidations have happened in Bitcoin, and then a little bit less there's been in Ethereum. But in general, we've seen a nice little pullback from the high yesterday. We went up to 111,700 yesterday, and now we're down at 109,400. Now, that's nothing compared to the pullback we've seen in gold. Gold's fallen down 4%, which is actually huge for gold. I mean, it was up 4% yesterday, so it's pretty much just retracing to where it was at the beginning of the day. But when you look at the overall market cap, yesterday it went up to about 30.5 trillion. Now it's at 29.1 trillion. So a $1.4 trillion move. That's 65% the size of Bitcoin in a day in terms of market cap. Now I was searching around to see why this pullback was happening. And really, I think it just comes down to being overextended. Gold's been going up so much. I mean, no matter what time frame you look at, 5 days, I guess, it's just slightly down, but 1 month it's up 11%, 6 months it's up 22%, year to date 57%. So I think it's really just a slight pullback because we've been going up so much, or gold's been going up so much. Compared to any of the moving averages, it's well above any of them. The RSI is overextended, overheated. So yeah, I think it's just normal to see some kind of pullback. Same thing will happen to Bitcoin at some point as well when it has a big run. But right now it's happening to gold. This is an incredible year for gold. Now, before we get to Raoul Pal and Tom Lee and some other stuff, I found this really interesting. Amazon is reportedly hoping its robots can replace more than 600,000 jobs it would otherwise have to hire in the US by 2033, according to The Verge. From what I can tell right now, I think they have around 1.5 million jobs. So we're talking about increasing the workforce by 40%, but with robots. So maybe they have to increase the workforce, their actual workforce, a little bit more, or maybe they're churning jobs. Actually, maybe they actually end up firing some people. But either way, if they have robots that work instead of the $20 an hour workers, I was running the math, and that's $40,000 a year that they save. Of course, there's some upfront investment in the robots, but let's say they just save the $40,000 times 600,000 employees. That is $24 billion a year. But keep in mind, these robots can go more than workers can. They're going to be going more than 8-hour shifts. They're going to be working nearly 24/7 minus some maintenance and some charging and stuff like that. So let's say they work 20 hours a day. And they're also working 7 days a week. So instead of 40 hours, they're working, 140 hours? So, I mean, you're looking at maybe, $84 billion a year that this would save the company. Again, there's going to be maintenance, there's going to be electricity costs. So maybe that's not all margin, maybe half of it, right? I think it's probably more efficient than half. But let's say these last long enough and the maintenance and electricity costs only cost half as much as an employee. That would be $42 billion a year in profit from this. This is without any of their business lines growing at all. This is just replacing what would be other workers. So that's hugely profitable. I've been saying for a long time, I really like Amazon where they are right now. And I think they're going to be one of the biggest winners of AI. Now, another big winner of AI is going to be Bitcoin, because in a world of absolute abundance, scarcity will be valued in my mind. Now, a lot of people are worried right now because this is typically the quarter we top out. Again, this is a really important chart. Each circle around is a cycle. So you can see like each quadrant is 1 year. So it goes in the middle and circles around, circles around. We're in the fourth quarter of 2025. So look at where my mouse is right here. Typically, this is where we top out in the second half of the fourth quarter. This is what's happened in the last 3 cycles. Of course, we don't know if this will happen this time. We did have a new top in the fourth quarter of 2025, right at the beginning of the month. But we don't know if this cycle is going to be like every other. This is what's got a lot of people worried in my mind right now, is that we've just always seen this being the top. So when we fall down, it's no longer a buy the dip moment. It's a we could fall down for another year moment in some people's minds. And that's scary for a lot of people. Now, we have not seen October be red the last, 7 years. You can see all these circles. We've always seen October be green and then continue up and up and up until the final blue dot. Now, this is very different because we're actually falling down, where we've actually had a pretty bad October. Now, I wanted to see what Raoul Pal said, because he apparently said the 4-year cycle is now the 5-year cycle. Bitcoin should peak in 2026, probably quarter 2. So let's play this and we'll talk about it.
Is Bitcoin sort of not wildly off to the races yet? And it's this chart. Bitcoin is basically, this is a detrended Bitcoin, and it's basically the ISM, which is the business cycle. Remember, we've always said it's the business cycle stupid. It is always the business cycle stupid. And all of these people who claim it's the 4-year cycle based around this and that, they don't understand the fundamental of what the business cycle is, why there's a 4-year cycle in everything. And we've explained it, and we'll go through it in great detail tomorrow in our Everything Code presentation. But basically, it's following the ISM. And rates have been following the same pattern. You see, rates should have come lower. They need to come lower because we need to roll the debt. We've talked about this. That's part of the Everything Code, fundamental part. And ISM, because rates are so high, has meant that Main Street has been screwed while Wall Street's made money from debasement. Earnings versus scarce assets. This is the issue that they need to solve, and they need to get rates lower. They get rates lower. Why? Why do we have an elongated business cycle that looks like virtually no other real other time? It's because, and I only just found this out redoing the work on the Everything Code recently, is that in 2021-22, they actually extended the maturity of the debt from 4 years to 5 years. So that extension of the maturity of debt has pushed out the business cycle a year. The 4-year cycle this time around is a 5-year cycle. We don't know what the next one will be until we see where they all end up getting refinanced. Whether it comes back to 4 because they managed to get some stuff at the long end, or whether they shorten it because everything's in the short end. We don't know yet. But this one is a 5-year cycle. And this is what it looks like. A 5.4 year sine curve. 5.4 years is the exact average weighted maturity of the debt. And it tells us the ISM should peak by 2026. We think liquidity probably peaks before that, as the rate of change of ISM changes and the rate of change of liquidity changes. Our best guess remains well into 2026, probably Q2.
I've said this a lot recently, that just because we've topped out in the fourth quarter doesn't necessarily mean we have to. Now, that I also wouldn't necessarily bet heavily against a 4-year cycle. Typically, it's always been right, but also it's been right for a reason. It's not just because, 2013 happened and people said, or 2014 happened and people said, oh, well, we're obviously going to top out in the fourth quarter of the post-halving year. And then 2018 happened and everyone sold because of it happening in the last cycle. That's not the case, right? There's a reason why it happened the first couple times. Maybe last cycle people said, well, it's topped out this quarter. The whale said that, so maybe they sold. But also 2021, that was the peak of the broader market too. So it makes sense that people went from the stock market, they were gambling heavily after all that COVID money. Some of the penny stocks rallied at the beginning of 2021. And then we had one final push in Bitcoin towards the end of the year and with the metaverse and that kind of thing. And then we had just a terrible bear market. So it made sense that that crypto would crash too. But right now, unless the traditional markets are at, their Pico top 2 and we see a big bear market, it would make sense that Bitcoin would probably continue doing fairly well if everything else is going well. If the Fed's lowering rates, if they're increasing liquidity, if the stock market's doing well, if gold's doing well, if the economy's doing well, if businesses are doing well. Why would Bitcoin go down 70%, especially when it's not really been all that exciting, I'd say? Let me know your thoughts on this underneath the video. This cycle has already gone on, I'd say, fairly long, considering when we start peaking to new all-time highs. I mean, we started peaking at the beginning of 2024, right? I'm not reading this wrong. Typically, we have about 1 year from the time that Bitcoin makes a new peak to when it hits its last peak in the cycle. Back in 2018, or 2017, it was even less. It was 9 months. Here, it was, 10 months. Last cycle, it was about 12 months. This cycle, we peaked, it's crazy, back in the beginning of 2024, and we're still peaking now. We've already seen a longer cycle than usual, at least where Bitcoin's hitting new all-time highs. It also had a shorter bear market. It still seemed like a long bear market because it was over 2 years from the very peak to the time that we hit a new peak. But typically it's 3 years or longer. So again, we've already changed the cycle dynamic a bit this cycle. And it's always evolving too, right? I think just in general, markets are crashing for much shorter periods of time. Look at traditional markets, sure, they can still crash. We can still see the S&P 500 and the NASDAQ go down 20, 30%. But they're very short crashes, whether it's April, right? VOO is up 30% since then, maybe. The S&P 500, maybe even more than that. A lot of tech companies up 50 to 100% since then. And then you look back at 2022, that was a very bad bear market. It was deep. The NASDAQ was down 33%. So then to get back up to the new all-time highs, it had to go up 50%. If you fall down 33, you have to go up 50 to get back. And it was like a 1 year bear market, maybe even less time than that. You look at COVID, it was a couple months. You look at 2018, it was a couple months. Compare that to 2008 or 2000, where it took years to recover. Markets are changing, right? People don't want to leave money in savings accounts, CDs, money markets, at least like the majority of their money, right? They want to put it into assets. So it's hard to get extended periods of drought in the markets or extended crashes. And also the Fed's just willing to jump in very aggressively compared to in the past. Presidents don't want the market to be down for extended periods of time where people have their retirements really screwed with. Let me know your thoughts on this underneath the video. Let me know what you think about what Raoul Pal said, right? I think at the end of the day, we don't know whether the fourth quarter is going to be the top of the bull market or if it's really going to fake out a lot of people, and that's going to be max pain, where most people get out of the market, then whales push us up higher, and then eventually retail FOMOs back in. We don't know if that's going to happen, but I have positioned myself to do well in either circumstance, where if we go into a bear market, great, I've made money, I've taken profits throughout the bull run, not really on Bitcoin, but on alts and leverage trades. And then I'm also willing to buy more during the bear market if we see some good prices. But if we go back into the bull market, I'll be able to take advantage, right? And to be fair, we're sitting at $110,000 Bitcoin. This was unthinkable a couple of years ago. I mean, talk to people back at the bottom of the bear market. Bitcoin was trading around $20,000 for like a year, 6 months on either side of this bottom. And it was dark and boring. And people were worried that Binance was going to explode after FTX exploded. And a lot of people were thinking that Bitcoin was going to go not just down to 16,000, but down to 12,000. People were talking about 8,000. Some like Bitcoin OGs were saying if Bitcoin, like I can name names. Some really big crypto YouTube channels said, if Bitcoin goes under 10,000, I'm selling. Like, I'm just going to get out. I'm just going to sell everything because obviously Bitcoin's failed. But we stuck to it, added a lot during the dip, added a lot during the bear market, and we're here today, up a lot on our Bitcoin bags and really heavy Bitcoin, which has been the way to go this cycle. So again, if you do want to trade, if you want to go a little bit more risk on this dip, you can check out BYDeFi underneath the video. Right? This is where I add a little bit of extra risk reward instead of trying to buy small altcoins that probably will go down to zero. Instead of doing that with the majority of my risky bag, I would rather leverage trade mostly Bitcoin, but also some other big caps. And we've been able to make life-changing amounts of money this cycle, and we've taken profits too, which has been great. If you want to try out some other exchanges, I recommend having multiple exchanges. There are links to BTCC, BitUniX, WEEX, BLOFIN underneath the video. I really do appreciate it. A lot of those exchanges have bonuses going on right now, so just click around the links and you'll get some pretty sweet bonuses for using my links. Thank you so much. I'll see you in the next.